Going to take a look at Fibo Quantum again, a 4-hour chart of the Euro Japanese yen. And I appreciate that a lot of people can't sit in front of their computer waiting for 15-minute charts to register trades. People have jobs, they have other things they want to do. And let's be honest, a lot of people get into trading so they have more free time. So day trading can be a drag, to be quite honest with you. Not to say that it doesn't have a place in your business plan. When I started trading, I day traded, but I day traded for a purpose, and the only purpose was to help build up my trading account. I also took swing trades, but day trading was the way to build up a trading account. It took a while. It wasn't overnight. And that would allow me to have decent position sizing with decent risk protocols when it comes to swing trading. And that was always my goal when it came to trading. So I'm going to go back to April 1st. I can go back, as far as this will allow, but these videos will just take forever. And here's a really good example of how you can stay out of markets that just aren't moving and why following the rules is vital. Now, again, this is the 200 period EMA. Remember, we want to trade the global trend. And I'm using a bigger moving average because these can set up pretty large. And I certainly don't want to have get whipped around, right? So if I'm using like a 20 period moving average, sometimes, you're going to have the buy and sell. Now, let's be honest. Go back to the rules. You are only allowed to take one of these trades. So, for example, if in this trade here, the sell setup happened, the sell entry happened, and turned around and came back up to here and eventually triggered in, I couldn't take this buy entry. I can only take one. I'm sure you could use a 20, and maybe I'll look at that at a later date and make some rules around that. However, I just like the bigger trend, right? Because that's what we're looking at. So this is a good example of how following the rules, you see this buy entry stops printing here. So you don't get triggered in, even though this trade, look, this is pretty painful to live through. This would have had you triggered in. Let's say this was the area you triggered in. From April 9th, over here is when you get even close. So this is almost the whole month of April. You're sitting through this chop, and this keeps you out of it. We do get a buy entry set. No, I'm going to back up again. I did say in another video, when you look at your buy entry to your first take profit, this is the same distance to your sell stop loss. Okay. I'm sorry, to your buy stop loss. It's the same distance. So this would be a risk to reward ratio of 1 to 1. For me as a trader, when I'm getting at least close to what I risked on the trade, well, that trade worked out, right? It's successful. So you certainly don't want to, let's say you got triggered in, let's pretend this one doesn't set up here. If you're up this close to your take profit target and the market's pulling back, take some action on your trade, scale something out, take your stop and move it to break even so your risk is you're out of the market, even cut your risk in half, do something. Because when the trade has gotten close to a profit target that you set, especially if your profit target is a multiple of your risk, well, then the trade's worked out. So this trade doesn't get triggered in. So we come over here, we have a buy and a sell. Now the sell, it sets up here and eventually comes underneath, right? But we can only take our first one, and it's the buy entry. And again, this one rallies up to 56 pips, I think that is. And your take profit is 10 pips higher. This kind of move, you have to do something, right? You have to. So we've got, just for purposes here, I'm going to write down 50 pips as our how far we got on this trade on the buy entry. Actually, I should use some glasses here, because this is my buy stop loss right here. So this trade actually would get stopped out. Let's keep it honest. So I get stopped out on this trade. You'd get stopped out for, this is 69 pips. So we have a loss, right? Because we have a loss because it came down here first, here, before rallying up. I totally missed that. I want to keep things legit. So let's write down 70. Let's just round it to 70 pips, okay? Now, I hope that was actually a good lesson that, I'm not trying to pump this strategy up with fake results. I want to keep this as objective as possible. We have a sell entry set up below, triggers in, and we get all the way to our third take profit target. So this trade is plus 230 pips. All right, so that's totally wipes out the loss that we had there. So let's keep on going here. So our buy entry sets up here. It doesn't trigger in. So we don't get hit, but it doesn't even matter because look, when this sets up, it's our sell entry here, right? And the buy entry anyways, remember, it sets up above our line. We can't take that trade at all, right? We can't. Why? Because it's set up above. Where's price? It's below. So our sell entry, another take profit target of 200, and let's say 250 pips. And actually, you know what I'm going to do here? Before traders start, typing in the comments, wait a second, this might have hit it. Let's take a look. This buy entry is at 13136, okay? Let's get the high of this candle. The high of this candle is 13133, all right? So you don't get triggered in. Again, that's just me trying to keep this as legit as I can. All right, so let's keep going here. Oh, it's our last thing. Well, we have a buy entry here, but it's below our moving average, and our sell entry is way down here. So we can't take this trade anyways. And it did rally for 170 pips. We can't add that actually, obviously, because it's not part of our trading plan. And our sell entry is down here. Now, if price does drop, can we take this trade? I hope your answer is no, you cannot. Why? Because our trade, well, besides the fact that this has already stopped printing, and this will come out over here, the fact is, even if it just hit here, came up, and just dropped like a rock into here, we can't take it. Why? Because our buy entry was already triggered in. We've already used this setup, right? That's just assuming, for a second that this was above, okay, for example. That's another example of how this will keep you out of being whipped back and forth in the market, which is pretty important. You certainly don't want to get whipped around. So let's take a look at our final numbers. And here we got 3 trades, 1 loser, 2 winners, and this is about 410 pips of profit from beginning of April to today, June 13th. So only 3 trades, but again, it depends on your position sizing. Okay, if you just, let's say, just round it, you're trading 1 standard lot. Now, obviously, it's not going to be a 10. It's not going to be $10 a pip exactly because we're trading a euro yen cross instead of a US dollar cross. Even at 410 pips, that's over $4,000. I think anyone would like to have an extra $4,000. Even at a 1, the dollar a pip roughly, that's $410. That's not a whole lot of money, but you got to start somewhere, right? And for some traders, you know what? For some people, $410, that's their whole monthly grocery bill. So, money's money. That's the way I look at it. And as your account gets larger, your position sizing will get bigger as you stick to proper risk protocols, 1 to 2% of your trading account. All right, that's it. Click above, download Fibo Quantum, give it a go. I've so far I've got no problem with it. I will look at a smaller moving average, and we'll see how that works out. Off the top of my head, I'm thinking on a more of a bigger time frame, we could probably pull off a 20 moving average, but not in a smaller time frame, because you often see it where price just whips back and forth over moving averages, especially the 20. And when you see price whipping back and forth over a moving average, you're basically looking at a market that's in balance. All right, just mark off the highs, mark off the lows of that whipping back and forth, right? The highs and lows of that, and wait till that breaks out before you even bother with that particular currency pair or market, whatever you're trading. Anyways, let's keep it short. Thanks for watching.